Stick with me. I'm covering good news today. Specifically, I'm covering a recent article in ResiClub titled How Far Mortgage Rates Would Need to Fall to Unlock a Refi Boomlet. And the article is by Lambert from ResiClub, and Lance constantly gives us great stuff. And here's the thing, the news is great. And I'm going to just share some of the data from his article, then I'll share a chart, and then we'll figure out what it means. But how this in the money is defined as a homeowner that can improve their interest rate by 3/4 of a point. So if they can go from 7.5 to 6 3/4, they're in the money. Now I've seen it defined other ways, but this is a simple way to define it. And Lance is getting his data from ICE. So that's how ICE defined it. And here's the deal. If interest rates get down to 6.25%, 1.5 million borrowers are in the money for a refi. And at 6%, it's 2.2 million. At 5.75%, it's 3 million. At 5.5%, it's 3.6 million. At 5.25%, it's 4.9 million. And at 5% or less, it's just about 5 million. So depending on where you think rates are going to go, there is a tremendous opportunity for in-the-money refi, which primarily speaks to rate and term. And so here's the thing, and the reason why I stopped at 5% is 70% of current homeowners have an interest rate of 5% or less. It's not very likely that we're going to get below 5% anytime soon, but it's somewhat likely that we'll get, above, somewhere, not only low sixes, but maybe with a 5 handle. And so we can kind of track what the opportunity is going to be. And, the opportunity, while it's going to be very good, it doesn't compare to the refi waves of the past. And the waves in the past where we did millions of refis, millions and millions, it's not going to be that way this time. It's going to be little boomlets like we had earlier last year. Little boomlets where we're going to get rates are going to get dipped down, and we're going to get 1 million people to qualify, and we're going to try to get as many through the door as possible. So the refi business is going to be, the rate and term refi business is going to be pretty good. As a matter of fact, by the way, 1.3 million borrowers today could benefit from a refi of improving the rate by 3/4 of a point. So 1.3 million homeowners are in the money today. But that only speaks to rate and term, because with $37 trillion of equity, almost every homeowner's in the money, really in the money for a potential refi or a equity loan, a cash out second, fixed rate second. They're going to want to get that money to help them, service life events like getting married and having babies and starting businesses and making other investments, or even doing renovations, sending kids to school, all that kind of stuff. They're going to need that money, and we're going to be there to help them. So if you couple the rate and term refi opportunities with the already burgeoning cash out refi opportunities, the market really seems healthy going forward. I strongly recommend Lance's work. You should. He has a ResiClub is free. Consider subscribing to him. I posted his article earlier on my LinkedIn today, where I post several articles a day. Check me out on LinkedIn. This is great news. It's going to be a good second half of the year, and next year is going to be promising. I hope you have a great day. I appreciate you giving me some of your time, and I look forward to talking to you again soon. Thanks so much.